Testing, testing. Testing, testing.
The bell. It is Friday. Happy Friday. Excited to have made it. It was a slow 38.50. I get all excited. Then I realize, hold on. This is the same fucking range we've been trading in all week. Nothing actually happened. Nothing has happened all week. But hopefully, sometime soon, we'll have an action-packed trading day where we break out of this massive range and things will get fun again. Who knows? Let's get into it. Let's introduce our panel, starting with Money Mander. Good morning.
Good morning. Yeah, I couldn't have said it any better. I'm getting so sick of this. I'm growing gray hairs trying to find some plays while we trade sideways this week.
I feel obligated to make something happen. It's one thing like you take 2 weeks. This is now going to be day 14 that we've area. Trying not to go crazy. Diamond trades.
And we're literally right back where we started. So we'll have to see how we trade today. Hopefully we can get ourselves out of this range.
All right, Ramsey Rippers, good morning to you.
What's up, brother? Yeah, man, the SPY daily chart is just a chop fest the last 12, 13 trading sessions. I'm excited to break out of this range. Eventually, it will happen.
That it will. Stock Sniper, good morning.
What's up, guys? To be honest, I'm not even really complaining. I own this range. We could stay in here a couple more days for all I care.
I will say you've been doing a really, really good job of trading this range. Very commendable. All right, guys, let's get into it. So we'll go ahead and start the show by talking about the Fed forecast, what we saw this week. I know that we got some economic data. The boys are going to interpret that for us and then let everybody know what we can expect headed into today, headed into next week. What do you guys got?
Yeah, so let's start with the news that just came out. We just had some breaking news with NFP. So we had non-farm payrolls come in at 223,000, over 200,000 consensus. And then we also had unemployment rate come in lighter than expected, 3.5% versus 3.7% expected. So this just continues that narrative that we left 2022 with, that the labor market is so hot, sort of giving Fed reason to continue to be aggressive in this fight against inflation. There seems to be just no cooling down in the labor market here with this first data of 2023. Manor, what are your thoughts here?
I feel like we continue to say the same thing every time, right? It's like
Every time.
The FOMC and the Fed have this dual mandate. And so until the labor market starts to get weaker, they're not going to pivot or get any more dovish from their hawkish stance right now. And so I didn't really understand the green candle we saw immediately because unemployment rate under expectations and still well under the target rate of 4%. Payroll is hotter than expectations, still an extremely strong labor market. So in my sense, I don't take that bullishly because all that hits at is continued hikes and more monetary policy increases.
That's a given. And, for me in a year where unemployment is supposed to go up and we're supposed to, that's supposed to sort of catalyze the Fed pausing and maybe even clawing back on some of these rate hikes. This is not how you want to start off the year if that's sort of your thesis. So we'll keep an eye on unemployment going forward and see how it gets. We can move over to how stocks have started the year, right? So stocks have had a pretty sluggish start to the year so far. It's been pretty flat. The market was down yesterday following strong job data again. So we talked about how that just gives the Fed that green light to continue to be aggressive against inflation and keeping rates high. Real estate, utilities, and information technology have fared the worst as far as sectors so far this year. So we will see if that can change today. As Alejandro mentioned, we're still trading in this range even after the NFP news. So we'll have to see how we trade intraday. All right, so let's move over to the meat and potatoes of the segment today. So, Mander, I know that we're both of the mindset that the market does not, that we haven't put the bottom in yet, right? That the bottom is not in, that bottom that we set in 2022 will not hold. So, given that fact, do we think the market is going to bottom in 2023 or in 2024, right? So, let me go ahead and go first, and I'll get us kicked off. I really do believe that we have a solid chance of seeing the market bottom this year, right, in 2023, and I'll go ahead and tell you why. So the average bear market lasts, like 18 months, depending where you want to start this one, call it March 2022. That sort of projects a bottom out into the second half of 2023, just basic knowledge. Secondly, the stock market tends to bottom like 6 to 8 months before the economy. Analysts from all over the financial world are calling for 2023 to be the worst year for the global economy in several decades. So assuming that the worst of it hits like in the second half of this year, the economy bottoms in the first half of 2024, that would sort of mean that we could see a late 2023 stock market bottom. It seems like that's definitely possible. And then finally, the Fed talks a tough game about, crushing inflation. And to their credit, they've really been much more unwavering in their commitment to, keep financial conditions tight than many anticipated. So I'll give them that. However, a strong labor market has really given them a pass to do so. Just as we saw today, unemployment came in again, 3.5%. NFP data comes in hot. So I feel that if we do see a situation where unemployment starts to take up later in this year, I really don't know how much more resolute they can be in keeping these rates high. And I think that that's where you may get your pause or maybe even your pivot, which obviously would lead to a pretty substantial rally in stocks. And so for all of those reasons, I feel like you can make a case for a stock market bottom in the second half of 2023. What are you thinking?
So I see the case and I get that. But historically, when we talked about this question, right, I wanted to go back and get some historical data to say, how did this pan out previously? So, and I just did that 2023 market outlook paper. So I felt very prepared for this one. If you guys haven't read that, I put it on my Twitter 2 days ago. So to me, right, we talked about the 210 inversion a lot of times here. And that historically, excluding the COVID crash, because that was like a flash crash, I don't really count that as a true bear market, like we've said. The 210 inversion has come in 27 months before the stock market bottom has hit. And so obviously that usually the 210 inversion foreshadows the recession, and then the stock market is going to bottom before the recession typically ends because it's forward looking, right? But if you have September 80 was your 210 inversion, stock market bottomed in July 82, 22 months for minus 28%. January 89 inversion to September 90 bottom, 21 months at minus 20%. February 2000 inversion to June 02 bottom, 28 months for minus 50%. And then January 06 inversion to March 09 bottom, 38 months for minus 57%. And so going from inversion to bottom gives us 27 months. But even on top of that, right, the stock market usually bottoms after the 210 inversion has flipped back positive, because that's going to be your foreshadow. But then rates will eventually start to figure themselves out first before the stock market bottoms. And so ideally, you would want to see the 210 flip back positive before you could even consider that bottom would really be in. That's hit 3 of the last 3 times in these bear markets on an average of 15 months after the 210 has flipped negative and inverted. So even from that would put us into next year, because we just inverted in the middle of 2022, but it's still 10 basis points off of lows and falling. So let alone being positive, we're still like a minus 80 basis point inversion. So that'll be the first thing I'm looking at, is for that to get back positive. But that all just puts me into 2024. That would actually be the end of 2024 on average from the 210 inversion alone. And just to me, right, like we right now have overvaluations in the stock market as the dot-com crash in 2000, coupled with early 80s inflation and monetary policy hikes, unprecedented monetary policy hikes. So to me, we just have a long way to go. It's going to take time for all this policy to really get felt on the demand side of the economy. And where stocks are going to be trading at and valued at when that time comes, it's a long way down from here. And I don't think it can realistically happen within a calendar year.
I mean, look, I hate to be the bearer of good news, because I know that you love to just shit on the stock market and talk about how it's going to go to zero. But I really genuinely feel that people are looking at this like things are going to be okay. Like things are going to go according to plan. And I feel like when the Fed pivots and when things get bad, it's because things didn't go according to plan, right? Like I think when you have a situation where the Fed is, their back is put against the wall, things can change very quickly. And I think that that's the situation that we're going to see in the last half of this year. But I guess we'll have to let time tell, and we'll definitely come back to this segment probably in December 2023 and see who was right. But that's going to wrap it up for us. Absolutely. That's going to wrap it up for us on Fed Forecast. We will pass it back to Alejandro.
Awesome, guys. Before we get into the system, the market is starting to rip a little bit. But guess who doesn't care? Tesla can give no fucks today, about to break that $100 level. Did you guys see this? The stock's down like 8% in the pre-market. So that'll be an interesting one to watch today. But let's get into it, guys. We're going to go ahead and move over to the system now. So yesterday, slower day. As I told you guys on my Twitter, in the Discord, I decided not to trade. We did get a nice possibility of a trade, which was the break below the 50 SMA, good for about 30 points. But we were trading into key support at 3,800 SPX, and I simply did not feel comfortable taking that short because of the nature of the market. If we're going to be trading in this range, it's important to at least recognize that and learn, right? We're always learning. We're always trying to adapt. There's one thing to say, I want to trade a trend. I would love to take advantage of a 100-point move, this, that, and the other. Well, if the market isn't going to give it, you have to come up with more creative ways or at least be smarter when you do trade. So yesterday was me taking what I've learned over the past 2 weeks, quite literally, and applying it into the trading session yesterday, saying that, all right, we're back down to 3,800. What does the risk reward down here look like? It's not very high. The chances that we break this level are slim to none. And if we do break that level, then maybe I can look to take a trade short. And the level was never broken. So we ended up trading back higher up to the 50 SMA, which served as resistance as expected. But now with NFP, obviously things are kind of thrown. The market has kind of thrown a curveball at us. So the futures are up decently here, guys. 36 points. The S&P is up about 1%. So that's obviously going to be a bullish open above the 50 SMA. Now, what does that mean, though, as far as trading it? Because is this just going to put us right back at the top of this range that we've been trading in, guys? This 3870, 3850 area on SPX. It's been tricky up there. So if I decide to take a long trade today, I'm first going to want to see some sort of pullback, maybe consolidation, just some sort of trend, because we've had these super trappy moves at the open. This is a 30-minute candle here. We broke over this 3855, which was like that previous high, and we started ripping, guys, ripping. And I remember I was in this trade long, and I was super convinced, wow, there's the breakout. We're going to start to break out of this range. And in that same 30-minute candle, they brought us all the way back down. So we have to be very, very careful. I'm still trading with small size. The opportunity to make things happen and really pound the table is going to come. But it hasn't come quite yet, in my opinion. So it's important to chart out your levels. Take a look at the range that we've been trading in. Key levels of support and resistance trump all right now until the market starts giving us some more momentum. But before I pass things on to Ramsey for Bet the Bell, we'll take a look at the hourly chart. And as you can see, guys, when we chop around, it's reflected on the system. We can see breaks below the 50 SMA, above, below, above. And yes, those would have been winning trades, technically speaking. I took this one 2 days ago where we were trading above the 50 and we got a nice 30-point move, but that's about it. Okay. But as we can see, the hourly was telling the same story as the 30-minute was yesterday. But of course, with the bullish open, things will change trading over that 50 SMA. But that is my current thought process. I hope that helps you guys out just a bit. And we'll see if we get a nice opportunity to take a trade today. It is Friday. So let's, I guess, not try to do anything stupid, but if the opportunity is there, the opportunity is there, and we're absolutely going to take it. But I'll go ahead and pass things on now to Ramsey for Bet the Bell. Ramsey, what do you got for us?
Let's do it. All right, guys. So just like Hondo said, it's Friday. Let's not do anything stupid. Being a trader is very similar to being a co-host of a top morning talk show on the planet. You got to be adaptable. So we always have this green or red question. I'm going to stick to the green or red question today, but we're also going to throw in a part 2 of the question. We're going to go through it pretty fast. Since we're up about 1% on the indices, SPY's up about 3.5 to 4 points right now. I want to know green or red today, but also over or under. Let's go 38.40 on SPX. I feel like that's a good line, taking into account how we bounced off of NFP this morning. So Alejandro, talk to me. Green or red, and over under 38.40.
Green, obviously, because we're green right now. So how could we not finish green? And I'll go over. I'm just going to go super bullish into today.
Gotcha.
And that's just like honestly, the hopium at this point, hoping that something happens.
How can we not finish green is what you said. I bet I could give you a couple thousand answers on how we can not finish green. Snipe.
I'm going to have to go with red. I think we rip, and I think we go right back to where we started.
Interesting. Let's go diamond. Green or red and 38.40.
I'm going to jump in with Snipes. I'm going to go red, and I'm going to go under 38.40 for the same reason. I think that this is manipulation, and we're going to puke into the end of the day.
Yeah, I'm with you. I mean, I don't know if I'm with you as far as red, but I definitely think under 38.40. I tweeted this morning, NFP is not going to be the one to save this market. It feels like
you tweeted that.
It's just
that before it came out.
No, I tweeted that after it came out.
Oh, okay, word.
Dude, we are ripping right now. I mean, maybe we shouldn't be talking about green or red, and we should be trading.
Dude, right when this
thing
news,
it's just ripped 20 points in my face.
Right when Bet the Bell started, we were up $3.40. Now we're up $4.40 on the industry, just about $1 in a minute and a half. Mander.
Yeah, I think Honda is going to be the lone wolf here. I'm joining Team Diamond and Snipes. I think this just goes into exit liquidity at the open and they puke it because just off the numbers alone, I think it just hints at a more hawkish Fed. They can't cool off the labor market. I got to stick with my guts here.
Unbelievable.
Right. Can we get another person to say it's going to be red? Every time somebody says it's red, the market goes up 5 points. Literally. We need another person. Look at this thing. It's ripping.
I'm going to go red. That's all I have to say. All right, guys, that's going to lead us into our second question. I want to know, pretty simple. Does Amazon retest its COVID low this year? Right now, yesterday, I believe we closed at $82, $82.83. As of right now, I mean, I'm sure that we're ripping in the pre-market with the rest of the market. Yeah, up about 1%. COVID low, $65, right around there. Will we see under this COVID low? What do you guys think? Does it hold or not, Alejandro?
Does it hold? I'll say no. It's funny, Man and I were actually talking about Amazon and their struggles yesterday. The retailers are obviously struggling. I think it's a safer bet to say no.
Gotcha. Sniper?
I think if we take a look over towards March 16th, we could see a pretty similar level to where we're trading at right now. So it is possible that we could get a double bottom bounce. So that's what I'm going to have to go with on Amazon.
Diamond, what do we got for you today, brother?
I'm going to say no. I'm going to say it doesn't hold its COVID low. I think it creates a new low, and that's where I'll buy some.
Okay, interesting. And Money Mander, I know that this has been you guys can find this chart on his Twitter. Just go to his Twitter, click the little top right button, the search button, type in.
You can find it pretty quick. This thing's not holding COVID lows. I think it's sub 70. The fact that they laid off 10,000 employees originally, guided down into the holiday season, and then just this week announced they're laying off another 17,000 because clearly revenues are below their guide down expectations. The name's going to get smoked after this earnings report.
Gotcha. So you think we see sub 70, our COVID low is 65. So I'm assuming you think we see sub 65 as well.
Okay, then yeah, sub everything. I maybe at that point buy or step in, but it's going to see under COVID low.
Right, and I think our 2018 lows was like $58, maybe 60.
Okay,
that's so. All right, cool. Last question of the day. I want to know what what you guys think is going to be the best performing sector of 2023. Another end of year question that we'll have to revisit in some time from now. 2022 best performing sectors off the top of my head. Obviously, I believe energy was number one. Healthcare was probably number two, sort of. I know that a couple of those big names were down, but a lot of them just absolutely ripped in the last 2 quarters of the year. Worst performing sectors, just tech, I would assume, and probably auto. Yeah, tech and autos. Tech definitely number one. What do you guys think, Alejandro? What's our best performing S&P sector by the end of the year?
So, typically I like to give like a really creative answer and be like uber bullish and exciting, but I'm just going to go with the consumer staples as the recessionary trade. I think it's just a smart thing to say because I don't have a strong enough opinion otherwise.
Gotcha.
Yeah, quite honestly. Noah's laughing, but it's true. Like
sometimes that's the best way to go. Just
I like this. I like the safety.
Yeah, I'm not the guy that goes safe. You guys know that. But this question, I don't know.
Ark is going to end the year green.
It's not.
I'm going to have to go with energy. I think that the price for gas and energy also probably will increase, giving them more revenue. So similar to last year, I think we might see another year like that. And I'm going to have to go with energy as the best performing sector of 2023.
Diamond.
That's really interesting, Snipes. A lot of people are sort of betting on that trade to reverse. But I feel like either way, people are like really strong on one side or the other. You know what I mean? Like if you're betting on energy to continue, like you're like kind of like really passionate about that. So it'll be interesting to see how that one plays out. I'm gonna go pretty boring as well with utilities. I think that utilities will outperform this year.
I like it. And Money Mander.
Yeah, that is an interesting one because I've been seeing talks of both sides of the energy one. Obviously, you guys know where I lay, but I've been seeing reflationary talks as well. I think Diamond hit on this where people are thinking that energy prices could spike up again from their peaks. Obviously, crude's down pretty fat off of highs. So that's a good one. I'm going to go with Diamond here. I think utilities and or financials, one of those defensive names will outperform, be it by a small margin and probably red.
I was going to go with financials too. I think it's also important to note as far as the energy sector. Snipe, I think that's really interesting, and you make a very good point. If I were to play the devil's advocate, I believe that institutional investors, like coming into 2023, that energy sector has the largest put open interest. If I'm not mistaken, Money Mander,
it's like the largest net short energy.
Gotcha. So that wants, I mean, that's such like a public information. Maybe it's a trap. Maybe it's a trap for retail. Who knows? They could be lying to us. I think financials are going to be the best performing sector of 2023. So that's going to do it for Bet the Bell. I'm going to pass it back to Alejandro right here.
All right, beautiful guys. So typically we would be doing today's top watches where we go around and ask everybody what they're taking a look at. But because of NFP and because we knew that the market was likely going to give a pretty decent move, we did not prepare any today. So that's going to do it for this episode of Beat the Bell. We hope that you guys enjoyed it. We hope that you guys had an awesome trading week. If you guys are new to the show, we're live every Monday, Wednesday, Friday, 8:30 a.m. Eastern time. If you're new to Kane Capital is our Discord group. We trade live all day, every day on voice and give out live entries and exits in the Discord. You can go to kane-capital.com to join us today. But that's about it, guys. And we'll see you next Monday at 8:30 a.m. Eastern time. Have a great trading day, everybody, and have an even better weekend.